Yeah, I'm just gonna explain when you guys upload a wall hit. So this is my chart because what I want you guys because what I have here and that's why it's very helpful with this. Let me get my I hate this when it starts coming out. Okay, hold on. And it's totally different than what you see on your what I'll be uploading to your chart. So I just want to show you a brief explanation of this. Now, uh, do we have? Yeah, you wouldn't even have this what we call the volume profile because this is another. It's free to license a lifetime license of VWAP or of thing. But the thing is, those of you guys who are on wealth charts. You get everything. You get the VWAP, you get the volume profile, and I'll show you how to do the volume profile later. Those of you in VWAP on wealth charts. But anyways, see this one, if you see we have you can see this is the plus one, plus two, and in between here you'll see this is the black line right here. That's one plus 1.5. Now down here you have the minus one and minus two, and you have the minus 1.5, but also have down here where the extension, these are minus 2.5. And this is when you get down here, you'll be expecting a pullback because this is already overextended, or this is what we call the minus three. Now, maybe what 2% of trades ever get down to plus to minus three or plus three. But when you saw that book that I sent you about the VWAP wave, and he's talking about when prices in value is in equilibrium. It's basically between the minus one here, down here, and the plus one here, and he's the view. It's just going to range from back and forth. That's what it's going to do. I also have your yellow line, which I call the trigger line or the chase line. That's basically here's the VWAP. You have 0.25 plus 0.25 here, plus 0.5 there, and then you have plus one. Okay. So
Mm.
these are, you guys don't have that on the one I just downloaded for you guys. See this? Because this is exactly what you're going to be looking at. And you probably say, what is that? Uh, where is that? Not this one. Oh, I think it's this one. What? Yeah, there. See, this is the same thing, except you have the plus one here, you have the plus, minus one down here, and then you have the minus two, and then you have the minus three. So when you're in equilibrium, in this case, it's going to be this whole area right here. You're in equal when the price is in equilibrium. Now, the middle here, right here, is the VWAP. In this one, you see when it changes color like blue, the price is above the VWAP. When it becomes red, it's priced below the VWAP. And you see what is it doing? It's usually ranging between that area, plus one and minus one. Now, like for example here, and you'll see this especially in the Stay in Your Lane, the guy futures fanatic guy, Rod Casilli. So this is what he trades is basically that's what he trades. Especially I think 11, let's go 11 by because that's what he uses, 11 by 3, but I use a 40 by 10, which is just as good. It's more it filters out a lot of noise. So I put this on a 11 by 3, which he has. Yeah, 11 by 3 or no, 11 by 2. Yeah, 11 by 2. So this is what his Renko charts look like. Let me just get this and create it's a lot small bars. And
Yeah.
see that's what I'm saying. So this is what his looks like. So what he does, and this is his system is very simple. Um, but you can see this is way too small. So you see the areas here. So this is basically what? This is the VWAP, I think. Yeah, this is the VWAP. Here's the minus one. So right now, what he would be trading if we're up here, he would be trading right now. See this? He goes from here and maybe down to the VWAP. And he would put a trade here, right? And a stop maybe up here where you have the swing and just let it go until his target would be the what? And that's where it's going. You see that? Right there, it hit it. It hit it.
Mm.
See, that's what we call reversion. Going from the, this is what we call yeah, the plus one. This is the plus one deviation all the way down to the VWAP. And that would have been a good trade. That's how he trades it. Now there's 233. He has that on here, except it's a dotted line. It's a line. He doesn't have these other ones. These like the which one is this? Is the 50? Let me see here. So I don't see when you have the VWAP, you don't need the Keltner channel. So what we're seeing is really, in fact, you can either do away with 230. You can keep the 233 and do away with this 50. I think this is a 55 EMA, and this is the 21. So when this crosses, like I said, when you were doing the trades, you see the 21 or the yellow below this, what we call the mid. Well, when we were calling it the mid band, so really the 55 EMA. When it gets below that, that's when you know you need to enter a short. Now, with the futures fanatic, just as long as you get up here, you're gonna put a trade, and it doesn't matter because it's gonna eventually get down there, and that's what it did. But his stop is there. Again, what is his stop loss? Basically his what is that? His budget, his daily budget is 250. So he's trading around 2 micros. Okay. So if he took 2 micros and let's say we have a signal here because now here's a 233. So let's say we entered here. Your stop would be up there. So your stop in terms of how much would that stop be? So let's see, put it here, and your stop would be here, maybe around there, off that swing. That's $27. So you're talking about
Mm,
if it loses up there and you're trading 2 contracts, that loss is only $54. However, if you just take this and let's say, you remember I have your ATM strategy. Well, first target would be hit for sure. Then you just keep the other target, just keep it running. So usually that first target will be hit. So let's say you entered here, right? Where is that? You entered right here, right? And you ran this all the way down to the VWAP and hit that your profit target there. That's a $72 trade. Now,
mm,
if you're trading 2 contracts, that's around what 144, right?
yeah.
Um, and the thing is, his goal is if you can make 250 a day, we're not in a hurry to either pass, but you'll just be consistent with that, right? You're never going to be hitting your, close to your drawdown, and it works really well for a funded account because that's, well, this is basically when I first started applying it. And I said, "Oh, this is actually pretty cool." I mean, there's no pressure. If you lose, you don't lose that much because you're trading micros. But at the same time, if you were in a lose, like say you're down, but you get it back up to maybe 250, that's your minimum. If you win $250 on a 50K, that's fine. Um, Anywhere between 250 to 500 is fine. You don't want to be over trading more than that. Um, so after that, once you hit that daily profit goal or even daily loss goal, you just quit. Don't trade anymore. You keep on doing that repetitively every day. So what happened here? So again, if you read the rules there, and this one, what I like about his thing is you don't care if just as long as you're at that level, right? So for example, you're here at the VWAP. What's it going to do? It looks like it's not going to go past that. How do you see that? Well, we're getting now a higher low. You remember when it becomes a higher low and it breaks this BOS and it's going straight up? Now, there's several things that you want to do here. You have the 233. He uses the 233 as well, right? So when price is below 233, we're looking for shorts. When it's above, then we're looking for longs. In this case, you see this, so this is basically 11 by 2. We get above there. We're looking for a pullback. There's the pullback, and then we get up there. Where would your target be? It's gonna be where? Up here, right? So let's say you get in here, and now it's coming back down here again. You see this is the price right now, the live price. And you can see now it's gonna try to test this 233. Is it gonna test? We'll see. Well, it looks like it's going down. Now, if you entered here, your first target would have been hit. Your stop loss is down here. Oh, this is going down. Yeah. So what if this is already going down, you see this cross like that, I would close it out. I would close whatever the runner was going because you might think your target would have been up here. You want to make sure that that's the day, yeah, that target would have been up there. And so what happens is right now, yeah, you'd probably have stopped out once it gets below the 233 because you're expecting this to hit the 233 and bounce off and come back up. In this case, it didn't. So once it crosses here below, you would have closed the trade out. It would have still been profit because you would have gotten here. Your entry would have been here, and your exit would have been somewhere here once it closes below the 233. Small profit, but again, still a profit. You wouldn't be a loss. Now, you see this move coming down. Would you take, remember I told you, do not take the first impulse, which is correct. What you want to do is
Hmm.
see this pullback. Because sometimes when you do this first impulse, you take it here on the phone and bring it back up. So you want to see first the pullback and then continue back down. If it doesn't continue back down, at least you're not in that trade and you got stopped out. So you want to see a pullback and then you want to see a reversal bar being that, this blue or white. Now, if you're using on this one, yeah, I don't. So what I'm going to do here is I'm going to add. So this is by 11.3. Now, if I have a 40 by 10, it's at least you can see the difference here. Say 40 by 10, which captures the trend a lot cleaner. Oops. There's your 40 by 10. A lot bigger bars, but what we're doing here, like I said, if we end, it went up here, you can take that break. Yeah, you could have taken that, hit your first target, comes back down, and you have that runner. And when it comes back up like this right here, I would add more contracts, more contracts, and it continue going up. Target again would be if when you enter here, which we're already in the +2 deviation here, right? So here's yeah, we're already past. This is already close to +3. So what's going is just going up, and until you see it cross back down or cross below this yellow dot or yellow dash, that's 21 EMA. When it crosses there, you can get out. That'll be a good profit. Now, when it comes back down now, this is the +1. Most likely it's going to come back where? Going to come back down to the VWAP. Or in this case, you have a strong, you can see it's already strong. How can you tell this is strong momentum? Well, now you have the yellow 21 EMA now below the 55. That indicates strong momentum now to the downside. So what happened here was this. You could have took profit here at the VWAP and came back up and still try to come back in again and got down here. But you see now when it closes above the 233, then you want to get out. And this time when you see it cross, comes back up. Remember the pullback? You can enter it right here when it breaks that. Again, your stop would be down here. You'd still be in this trade, but your target would be what? The +1. And that's exactly where it went. Came back, tested down back to VWAP, bounced off again. Again, if you wanted to take this trade right here to the +1, or not exactly at the +1, but anywhere that right there, you could have done that. That would have been a scalp trade. Now, where's price right now? It's right here at the between the VWAP and the 233. Okay. Um, 233 is important because it basically tells you where the trend is. Price is above the 233 and the VWAP. That means we're looking at long bias. If price is below the 233 and below the VWAP, we're looking at a short bias. So these are the levels. You can adjust them. Like, for example, I can do this. You can adjust the colors. Maybe I'll adjust this right now. So here, that's just its third three divisions rising. Where's that? Middle band's right here. So again, if you want to adjust this, so we have the inner band, which is basically this one right here, and the outer bands are that one. So what I want to do is maybe adjust this to maybe green or something like that. What do I have in my thing there? I think it's like almost like pale green and the middle band. Let's say it's around, where's the middle band here? Fuchsia, magenta. We'll see how this looks like. And the middle band, where's that? Inner bands are this. So this is going to be magenta instead. Middle band. That's the middle band. Let me see what that is. That's the VWAP. That's fine. That's fine. Okay. Let's see. Apply it first. Yeah. So you can have the middle band right here, but let me see how I can change the line here. Okay, there's the lines. I want to get this maybe thicker. So there's your two. I just want to make sure I have this plots. So the VWAP, we'll just keep this in one color. I would have this as black. Again, you can change it any color. Inner bands would be magenta, and I would probably have that maybe a little lighter. Let me see what it says here. Inner bands, we have control as to the, oh, okay, yeah. Right here, 0, 60, outer bands, middle bands, 0. What are the, okay, I'll just leave it like that. Um, the lines, plot with VWAP. Okay, that's the VWAP. That's why it's 3. We'll make this 2. And this one, what is that, dash dot here? Solid, no, that's fine. So we're gonna apply. There we go. What's the color over there? Pale green, outer band. Ah, okay, let's make that also magenta. And the one down here, oh, you can only just do the outer bands. Oh, wow. Or you can change any color you want. I just want to make sure that, see down here, oh, that's a little too magenta. Let me change this. Inner bands, magenta, middle bands, outer bands. Okay, that's better. I'll keep it like that. Middle band is that, inner band. Oh, that's weird. So what is the middle band? It's that one. Okay. Let me change that one to pale green. This is magenta. It's wrong one. There. Okay. So you can see that clearly now, right?
Yep.
Yes, no. Yep. So this is what we're talking about the zones. Especially with Trader Fanatic, Peaches Fanatic and the VWAP way with this with Chris Drysdale. These are the VWAP levels we're talking about. Um, so basically this is the VWAP right here. This is +1, this is -1. That's Chris Drysdale's system. When we're in the middle here, we're basically what we call in equilibrium. And when he's talking about we can go from one end, it's true. You can go from here, but also the first target would be probably the VWAP, and then if it comes back and you see we're getting lower highs, we still haven't been stopped out. Your stop would have been here, but you would hit your first target, at least the VWAP. And then you're trying to the VWAP's right here. You're trying to figure out, will it continue going up? Now, either going up or going down. Right now, we're seeing this as what? We're getting lower highs, meaning there is a potential it's going to come down. But the thing is, right now it's in conflict. Why? Because we're not getting lower lows. Or we're getting lower highs, we had to get lower lows. So it's more in a what we call a flag pattern or a wedge. So how do you see a wedge? Let me see here. Ray, that's what I want. So if you're going to see a ray, you go from one here, you have to have at least two touch points. There's your second touch point right there, which is right here. So that's one. And the other one is going up from here to where's your touch point. Let's say your touch point is there, or you would make it right here. So that's your lowest one. That's where the price is right now. It's in a wedge or a flag. So you want to see this breakout, or it's going to be in this, what we call a range. Because remember, that's what, if you look at the dries VWAP wave, it's basically anything you have the price going up and down, these to the plus one and the minus one, it's in a range and it's in equilibrium. You can see what it's doing here. It may try, if now it breaks this high here, this swing high here, that means now we no longer have a lower high. You want to see it close, not just pierce it. You want to see it close above. Um, so that means that once it breaks that, we're getting most likely trying to get to here, right? Either plus one or plus two. But you can see what it does here, and especially what he explains it. Let's go, this is what he does when we start trading this. This is and I like the 40 by 10 because it's a bigger bar. So here, let's go to 930, the opening. There it is. What did it do? 930. 930 right here. What did it do? Consolidated. Why? We're in basically, remember, well, this is already the plus, this is the plus two. So when we get down here and we break this, there's your trade coming down, right? Because now you're going from minus one to minus two, and that even your target. Now what is it doing right here? It's just ranging, consolidation, right? Until they break out. And usually the best trade here to take is when you're above either when it goes there and it pulls back and then bounces up, there you've been your trade, your target would have been up here. Either your first target here, the plus one or the plus two. And remember, that's what the VWAP wave is all about. Now, when it comes to the other one, which is the stay in your lane or features fanatic, right now, this is really because he's trading out here between the plus one and plus two reversion, I mean, going from plus two back down to the plus one. But right now, since this was the opening, it's trying to determine there. See how now it's getting wider. That's what you want to see because right now this is too narrow. And that's what they've been doing. They're just going up and down here. And what happens once they break out here? Now, where would your entry be? Well, it could be once it breaks out here, you could either enter it here or you could wait until it comes back down. There's your entry reversal bar, and then down either back down here. And take another trade when it pulls back again. You see that pullback right there. And the target would be there's going to be some levels here that I'm gonna, as long as it's below down here, we're already past the minus three. That means it's gonna somehow come back with it's like a rubber band. This is extended too far. Okay, my thing's gonna end right here. So just go over the PDF things I showed you on the strategy. But again, what I want to do is really go over your trades to see where your entries are. This can also be applied on, and I'll show you on, let me see here. Where's my thing here? On WealthCharts. show you the wealth charts here. So this is basically what we call the deviation levels. And that's why I want you to get used first to this mid band and everything, because that's basically the basic. And once you apply the VWAP, now you can apply what you learn in terms of the basic, and that's the basic foundation. Let me see. Oh, I already passed that. Okay. Let me just do this. Say log in. So here is the wealth charts. So let's go look at here. This is the from yesterday. I got some lines here because I draw that. So here you can see where the deviation, and this is more a lot better than the other one because now we have the 0.5, the yellow, what we call the trigger line. So what you see, the magenta here is the VWAP. What you see here on the red, you have the plus one right here, plus 1.5 right here, plus two, plus 2.5, and then plus three. Okay. You see what they did here? They were just basically what they did here was they were only 1.5 deviation. That's it. Yeah. And they were just there until they brought it down. Now, when you in this part, like around, see, it's kind of really tight yet. So that's why I don't trade until maybe 10:30. I wait for them to see where they're actually trying to bring the market. 10:30 comes and this is what it looks like right there. This is where, see that? This candle right here. So when I see this continue coming down like that, it's either I'm gonna wait for the pullback, and there's your pullback. When it comes back down there, comes back down, your entry would have been down here. You would have just gotten that, and then either you hit your first two targets, it comes back up. Again, we see this, right at the right at this indicator for the what is that? The champion trend. You want to see the price break or close above, not just pierce it, right? This is basically just right at there. They didn't want to close above. So what does that mean? Because that means it's going to come back down, and that's exactly what it did. And again, if you want to enter this trade, you can either enter it here. What I usually do is once it breaks a line here, these are deviation levels. You need to see the close, not just the pierce. Like for example, here, that's why this yellow line is a very important level. Because the thing is, you see here where it just came up and just basically got rejected, and you think you're going to take it that trade. No, it probably got rejected and went back all the way down. When you see the close of the candle right here, right? You see the close above it, above this yellow line, most likely it's going to try to test the VWAP. It didn't get quite there, but it did get up there. You would have gotten maybe your first target. Now, when you see then this candle close below that yellow, most likely it's going to continue coming down, testing the next deviation level, either here or eventually get down there, but we ran out of time. This is during the day, right? So this is during the afternoon. Yesterday when I took my trade, and you'll see on my live stream. I basically started late because I was in a meeting. I didn't get to start trading around 11:30. And so I was saying in that live stream, my goal is really around 250, $250 profit target because I'm just really trading the remnants of with this big move to the downside because I wasn't available to trade. So when I saw this, I said, I'll just take what I can get in terms of maybe 250. I ended up making over 1,200. Because I saw this and just kept, oh, this is another entry. Just long as you know where you're entering, especially with a pullback like this, and you'll see that once we get the second candle, you see it now. You see this candle, it's closing below this line here, this red line here. Once it closes below that, that's where you want to take a trade, maybe right here, and you want to see also close below this deviation level. You see, this one didn't close; it closed above still. This one did. So when you enter the trade, you want to take it at the low, not at the close here, but at the low of the candle, which is here. Your stop would have been right up here, up here. And so you took that trade, you entered there, you had some drawdown, but eventually it went down. And this is already late in the day. Yeah, this is already closed. You're trading here the aftermarket. But this move here was basically at 215. You could have taken this trade right there at the bottom of that this wick right there. Took the trade right there. Your stop would have been maybe, following this trend line right here. You could have been if you took the trade there, you could have been up here somewhere. It just kept on going down, and you could have moved your stop going down, and you would have got your profit going down. Again, the opening here was at 930. 930 is around right there, right? What happened? We hit this level. Did we get lower than this point? No, we didn't. See this there's a wick there. It just went up. Now, if you're seeing this, you have to see the close of the bar. So the close of the bar is up there. Again, at around 9:30, I do not take trades until 10:30. I want to see where it's going. And right here, 10:15, if I see I already broke this level right here, I would have taken that trade. My stop would have been right here. It would have continued going down. Again, this gets accustomed when you're seeing on a 5-minute chart. That's why everything has to line up. Everything here is red. The cloud is red. It just there's the pullback. It came down, pulled backed up, came back down. Your entry would have been there. Remember, we always enter the pullback. Same thing here. Comes back. You want to add more contracts to this trade, pulls back, comes back down. You would have entered right. Where's that wick? The bottom of that wick right there. You would have added more, would have added more contracts, and would have been all good trade coming down. It pulls back again. What does it do? You see this cloud, it's pretty big, so most likely it just pulls back to that cloud and it's going to come back down. Your entry would have been down here once it closes. Once it closes and you want to see the low, not at the close. You can do the close, but sometimes it may just go up there. But that's another way of more being aggressive when you do it at close or at the low of the candle. You would enter there. Target would obviously be somewhere down here because this is the VWAP level, deviation level. However, it didn't get close. It got close down there, right? And then it went back up. Once you see this candle close above this red line here, most likely it's going to start coming up. Why? Because that's what it is. That's what it is. So you would have entered here, stop would have been down here. You would have got your first profit target, came back down. Again, your stop here would not have been hit. And where's your target? It's going to be, especially when you enter here on this one. Yeah, this one, your target would definitely be here. It would have been hit right there. And you have your second, right now you have your second target or yeah, open still. So you just let it run, and if it hit there, you could have came back here and put down the profit target here or at this level where you have that, but most likely it's going to be here. Or even try for the VWAP, which in this case did not go all the way there. So you just have to adjust your either your stop loss or so forth, or just when you see that come back down, you just cancel the trade, but you're still profitable. So the difference between here is that these are 5-minute candles as opposed to the Renko charts or Renko bars. Okay, so let's look at some of your trades. Did this come back? Let me see here. It's going to probably disconnect again once again as usual. So here we go. So this is the two indicators I'll help you. Yeah, I can help you configure that, especially those of you who want to start trading the VWAP. We can do the VWAP first. So anyways, whose was this? This is Mish. But does she have her
Yeah.
trade? Yeah, I don't know where she entered. So I can't really evaluate because I don't know where she entered on here. Yeah, she says bullish run. Yeah, there's a bullish run. Pull back right into the mid band. Your trade here would have been when bounced off, which it did. Could have been right here or when it turned green. Either one. Target would have been, the outer band, which got there or here. Now, I don't know where she entered, but yeah, repetitive higher lows going up, higher highs as well. So that means um, you have a strong momentum to the upside. Yeah, I can't really evaluate this trade because I don't know where she entered. So this one, whose is this?
That's
Jabez.
Jabez.
Jabez. Okay. So this one, what what Renko setting are you using? Is this 11 by 2? Because these are small. Are these 11 by 2, Jabez?
I think he's not here.
Ah, he's not here. Okay. Yeah. Yeah, which is good. He entered. Yeah, that's good. Target. Yeah. He hit all the profit targets. He re-entered again, hit the profit because this is strong momentum you can see. Because it's really honoring what? You're honoring the 21 EMA. That's what's holding. It's basically that's the resistance right there. Once it breaks, obviously you didn't see it break, or even this is your super trend, it's still going down. He entered here again, got that one. He entered the long here, right? I don't know why he did that because we didn't really trip the uh what was that trend indicator. And plus, remember, this is if price is below that mid band, which is right here, we don't usually enter longs. That's going against the trend. But other than that, he just followed the trend, which is good. Trend follower. Is this Jabez also?
Oh, that's mine.
Ah, that's your okay. So let's see here. So obviously the best trade was when it pulls back into the mid band. There's your reversal bar. You could have taken it here. Anywhere these
Yeah.
two bars, either these, I was usually tell what is this setting here? You have it at 12.3. Okay. So you can either enter it at the second bar, right? Or at the break of structure, which is there. Either one. You're taking this all yeah, all the way up there. Again, it
Mm-hmm.
would have hit you would have hit your first target, the second target would have been hit, right? So this one, yeah, you took this right there, which how it's a good trade. It ran out of
It just
steam.
yeah,
Yeah.
it reversed.
Yeah, because right here, once you see this lower high, you know they're gonna bring it back down. So what
Yeah.
they did was they did that. What did end up here? Did they go down here or did they come back up?
It went down.
Well, did okay, yeah. So once you see that it goes down, so what you want to see here, once it breaks, let me see what you see here. You entered long, okay, you got out there. So again, once we look at this, once we break the mid band, we wait for the pullback and you enter. Same thing here. Once we break below the mid band, you can re-enter this. You gotta wait for it come down, pull back to the mid band, and then come back down. You would have taken that trade to the short
Mm-hmm.
side, right? That's why I don't say trade when you see a strong impulse, don't take it the right way. Always wait for the pullback. Like for example, this one too. When you broke here, yeah, you have the option of either taking it. It's up to you because this is a high probability trade. And plus, this is a pullback from this first initial pulse or first initial move. See, when you do trends, there are what we call A, B, and C. So this is basically the A, then this is the B. See, A wave, this is the pullback, then you have the B, and usually the second one is always the longest one. You can see here, this is the third one.
Ah,
It didn't quite make it to there, so it just basically
yeah.
reversed, right? It ran out of gas. So usually you have the one, you have the two, which is always going to be the longest one, and this one usually have a three that barely makes it and then comes back down, depending on how strong the momentum is. Like I'll show you another example here. So here, uh, where do you take a trade here? Right here, coming back down. Now this is your 233. Again, that's a good trade. So what happened here? You don't want to take a trade when you're close to the 233. Why? It's
Uh-huh.
going to bounce off the 233, and that's exactly what it did. So you took this trade. You got the profit here or no?
No, no.
Okay, so you got stopped out here. You re-entered here, right?
Yeah.
And so that did you hit your profit targets there?
Yeah, yeah.
Okay. So this one, okay. Remember what I said? Once we break that mid band and comes back down, you wait. That's what it did. It basically, what did it do? It pulled back, and then your entry would have been right here. You're waiting for another reversal reversal bar to the upside. You could entered right here. Stop would have been here. You could have rolled that all the way up here. So when
Oh,
you entered in this one, you entered
yeah,
in this one. Yeah, you got your first target and the second target got down here, right?
yeah, yeah.
Which is almost like, is that place to e break even? Yeah, that's what I'm assuming it is. So now what's going to happen here, since we were overextended, since we were out of the Keltner channel, you're going to have a strong see, it came back all the way down here. Now, this one, you want to wait for, let's say it comes down here, or it may bounce off the mid band. You just have to see what
Mm-hmm.
happens here. It can just continue coming down, pulls back, and then continue comes down. What did it do here? Did it go back up?
Yeah, it did.
Yeah, because it's bouncing off the 230, the mid band, which is a high prob high probability trade setup. Every time it pulls back like that, you want to see confirmation. How do you see confirmation when you get a reversal bar to the upside? So what's going to happen here? Which these are good trades. This one it's a good trade because you're waiting for the pullback, which is right here. You entered good, but it just ran out of gas. Yeah.
Yeah. I always have those situations. It was supposed to run, but it runs out of gas.
But the thing is, you want to see how which leg of this, because the thing is, it already did there, comes back up. It did create a higher high there, so you can tell when it starts running out of gas, especially here. I don't see what's going on here,
Mm,
where it's coming from. Is this the first, second, or third leg already? If it's already third leg and it's trying to still push up, you'd definitely be running low in fuel.
mm.
I think this is more of the final push. And then what did it do? It came back down. Did it bounce off here again or no? Just continue coming down or went back up?
No, it just went down.
Okay, yeah. But no, your entry was good. Um, let's see what's going on here right now. So I think this is live data. Where's my cursor? So
But
this is
when you say you're scalp trading, what does that actually mean? Because I just know that they're just short trades, right? But
yeah,
how short can they be?
5 points or less, or even 10 points on NASDAQ would be like 10 points. So for
Mm-hmm.
example, we have here, remember I set you guys into five contracts, right? Actually, you can start with four. Here, this is the one with the five, and this is usually, you see this 3 and 3. Yeah, this is exactly what you guys have. 40, then 30 and 60, right? Is that what you guys have? No.
Yeah, yeah.
Okay. So either 30, 60 profit, or you can have that. I think you have 40 and 80, right? I'm not sure. It's either 40, 80, or 30, 60. Anyways, so where's price right now? What do we see here? We see price coming back down from here. Why? From the +2 deviation, right? And just basically came back down here into the +1, and where would it usually go? Right into the VWAP. So now we didn't quite make it all the way down here, the -1 deviation. However, you see where the VWAP is and the 233. When you see it close proximity of each other, you're going to have strong what? Strong support. You see now we're getting higher lows. We want to see this break. This is another powerful resistance here with a pivot point. So you want to see what happens here. You want to see it break. And usually when you see it break, it's going to most likely pull back again. And if it pulls back up, then that's when you take the trade. So I've been noticing now whenever the time they break a break of structure right here, yes, they did kind of go up, but they came back down and then continue hitting this right here, the +1, and then eventually come back down right now. So now they're bouncing off the what we call the VWAP. Price is in equilibrium, and usually we don't trade until maybe it gets back down here, breaks this, breaks that swing here, comes back up, and then comes back down into this what we call the -1. That's going to be the same thing as you see on your wealth charts. Now, Excel and Kate, right? There, and who else?
Me also, Javi.
Javi. Okay, yeah. You guys have the wealth charts. So wealth charts. Where's my wealth charts? There we are. So wealth charts. Look where we are right now. So this is during the London or morning. This is the Asian session. So what happened here? We were up here at the +2. You remember it said there on the VWAP wave, the Chris Drysdale, it says there once you hit the +2, most likely it's going to come back to equilibrium. Where's the equilibrium on your wealth charts here? Well, it's really that right here. This is the VWAP right here. So when you're talking about equilibrium, you're talking anywhere from the VWAP here all the way to the +1 or the -1 down here. It can just, that's what exactly what it did. It hit the VWAP. Now, would you have taken this trade coming back down since it closed here? Yes. But again, I don't trade at oh, this is already 635. Okay. See this? It closed below the VWAP, so that'd been a good entry. The low would have been right, yeah, right there. Your 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 what you call it, stop loss can either be at this top of that current candle or the swing high up here. And then what did it do? It came back down, but it came back up. You could have maybe you could have hit your first target, but your second target would have hit the break even. Now, where would we enter the trade here? Well, one of two things. Since we're here at the VWAP, you want to see it break here, you could have entered right anywhere here, or even when it closes above the yellow line, which is right there, but you want to see the high of that candle, which is right there, and you would have got your profit target, the first one at least. What did it do? It hit that +1 deviation, came back down and hit the VWAP again and try to test it right now again. So basically this is more in equilibrium again. Why? VWAP +1 deviation. If you're maintaining this, you're just in what? In a range. So what he was talking about, trade the extremes, is basically trading extremes of this VWAP deviation of +1 or the -1 down here. You would be trading going up and down. Let's take a look on, like for example, right here, right? So here is the VWAP. We never quite got down there, but we did go all the way down to the minus. Is that minus? So stretched out now. So this is basically -1 right here. This is -2. This is -1.5. They're always going to try to range it between here. And you can see they started bringing it down, but not enough time for that. They closed the market. This one, this is before that. Let's see. Right down there. So there's my value profile. Again, this is what happened. There's your opening. I was already setting up. Why? We already see this yellow line. Remember I talking about the trigger line? It already closed above there. You would have entered right here. Target, your first target would have been right here at this level one, +1 deviation. And now you still have a second contract or how many countries you have, pull back and it's continue going up, right? Again, we have the green cloud. We have now the green long-term the champion trend. That's all good. The question is where are you going to enter? Pull back, you entered right here at that high right here and just took that all the way up until you see another pullback, right? Um, right here, when you see some rejection going on here, you see the pullback, we'd wait for this come back. We were thinking might come down to the VWAP, but it didn't. It just continued getting higher lows here until you see, and usually I'm going to wait until it closes above this upper red line right here, this red line. It has to close above. There's your high. Your entry would have been there. After that, it pulled back. You never got filled maybe until there. Target would be technically, I'm going to look at +1. Finally got up there, and that's during the end of the day. I don't know if you guys would be awake. 4 in the morning here. You could, like I said, you could just take that first profit target and that Your goal is to make at least 250. If you hit that, you can quit. But I would say that's the minimum you can make. I'd make between 250 and 500. But if you hit the loss target of 250, then that's when you quit. Now, my question here, as you can see here, what is our strategy set up here? We're looking at, again, 40 ticks, right? So we have three contracts. If it's that target, that stop loss, how much is that of a loss? So 40 tick on a M and Q. So we're looking at ticks. We're looking at 50 cents per tick. Yeah. Is that right? Five. Yeah. Five. Yeah. Five. So it's 50 cents per tick. So if our tick, there's 40 ticks. So it's going to be $20, right? And now we're trading how many? Three contracts. 20 times three is $60, right? 20 times three is $60. That's your loss on your first loss with three contract, or wait, sorry. It's going to be five contracts. So your loss would be 0.5. Yeah. So you'd be, yeah, five contracts. So that'd be 0.50 cents. How many contracts times five? Then your total loss would be, oh, that's 2.5 points. That's what that is. Hold on. 0.5 ticks. Ah, here it is. Your 40 tick loss times three. Okay. 0.5 times 40 ticks. Was that times what? Times three. That's your loss in your first trade. Let's say you lose your first trade. That's $60. What is the daily risk balance, or the daily, yeah, risk balance is $250. So you still have some ammo to trade until you hit the 250, but I'm sure you probably hit the win first. So you want to see your wins based on hit the first target. Remember, this has two targets. If you look at this, the first target is the 40 tick profit target. It hits that. Now maybe you might hit the next 40, which is make that, or here, 40, 80 ticks, double what you had there, and that'd be good. That alleviate the loss you had of $20. Because you hit this all the way out. So 40 ticks times, okay, so 40 ticks. Let me see here, back to the calculator. You're making over 100 if you play that all out without moving any stops or whatever. Right? So 40 again. How much is per tick? It's 0.5 per tick on M and Q, right? So how many ticks is that times 40? And we're talking the first profit target, okay? Times 40, that equals 20, times 3, that's $60, right? Times 3 equals $60 in the first target. And this one is your second target. So that's going to be at 80 ticks. So you're looking at this at 80 times 0.5, which is 40, times 2 is another $80, right? Yeah, let me do this. Yeah, 40, so 0.8 or 80 times point, what did I say, the tick value, 0.5. So it's $40, times 2 is 80. So what's your total profit here with the five targets? That would be 20 times 3. Yeah, it would be 60, $100. You profit $100 in your first trade if you hit it all without moving either the stop loss or you're not moving the profit target.
Um,
Yep. Yeah.
Question.
Yeah.
For the is there a way to set the stop loss and
It's already here.
profit
It's already here. Right there.
like per trade? Per trade.
That is per trade.
Ah, okay.
It just has two profit targets.
Mm,
Two profit targets, but the overall loss is 20. The stop loss is at 40 ticks. See here? Stop loss.
right.
So when you enter trade, it's already set there, the stop loss.
And then once the trade is set up already, is there a way to edit the
You
take
just
profit?
you can move the thing here. Let's see. What do you who's this? Is this
Ah, okay. So you can move it. I'm paper trading, so I can try.
oh Javi? So you yeah, exactly. So on WealthCharts, right?
Yep.
Okay,
Oh,
let's
all right. Okay. I didn't realize you can move the.
yeah, so here I'll show you. This is what I usually do. What are we right now? Hmm. So here we see this. We had the first impulse move, we had the pullback, and now we had that pullback. So now it's gonna try to get up here. So let's say I get into this. Oh, it's already 9:12. Um, oh wait, is this okay? Wait. I want to make sure that I'm not trading on the one that's already cleared. I have to buy. Yeah, here we go. Oh yeah, this is already I already passed this, so I don't want to trade that. Yeah, let's
It's
do
on
this one. Yeah, let's do this one.
okay.
What is my is that blown? No, obviously not. So this one I'm blown. What is my liquidation here? Down 30. Yeah, I'll take this one. That's the one. Well, I can blow that account. 782, 430. Okay, let's do that. 430. And we will do our own two contracts, which is multi-bracket strategy setup. Two contracts right here. This one I want to adjust this to 40 ticks. Stop loss, 40 ticks stop loss. First target is going to be 40 ticks. This one will be 80. So I'm just basically changing this, save that. Close. Okay. So now I want to take this trade. Remember, look, let's pull back. We want to take that trade. We take a buy.
Buy order filled.
See this now? You have those levels. Now you can make this bigger or wider so you can see it. Stop loss here. I would probably put this stop loss maybe right here. Maybe a few ticks down right there. So now see how I moved the stop loss?
Yep.
Same with the targets. Right now I have this target. Yeah, I'll be okay. I can maybe bring it down about right there. You want to see where the target is. Not right at the line, maybe just a few ticks down. So that's my target right now. Look at this. I'm already up 542. Um, again, we're looking at 914. It's not probably not going to hit my profit target. It's going to wait till the opening, but if it does, that's fine. But you can move it. You can move your stop loss going like this,
Yep.
or you can move like that. Same with your profit target. Okay.
All right. Thank you.
Yeah. Any questions on WealthCharts here? Why did I take this trade? First, we're above. This is the VWAP. This is the trigger, or what we call the chase line. We closed above. In fact, this one already closed above. You're going to take a trade here, you'd be profitable right now. Most likely the target is gonna be here, +1 deviation or anywhere there. I can maybe move it down a bit here. So I don't have to be right. Sagad's no, Sagad's +1. You can have maybe a few ticks below that, which I did there. Now, will this probably hit my target? It probably hit my first target, but because the opening will create a surge. Now it can either create a surge to the upside or maybe downside. Like I think who did that trade? Was it Kate? Where's her trade here? Mhm. Oh, Axel, that's it. Okay, Axel. Yeah. Well, she did a good trade. Yeah. See, she sold right here, was going down, right? There's a target. You hit your profit target there. No, 79. Oh, this. So basically, this one is a 79, at least a $79 profit, right?
Yes.
Yep.
But my first trade is I thought when I saw the sell zone, I actually clicked the buy
Hmm.
button. So the
So
first trade is I lost $40.
right, because of that. Yeah, that's why. And this is all about,
Yeah.
practicing on your thing, right? On your,
Mm.
let me see here.
And then I tried again around
Hmm. Yeah,
6 o'clock
Limit order
PM.
filled.
yeah, on
Yeah.
there. So you heard that message. That's basically I hit my target. This one, hopefully it hits. So again, those of you, you can either bring this stop loss up to here to break even, at least when it comes back down, you're not at a loss. You already hit you hit your first profit target. It comes down there. It's still a small profit, right? But at least you're profitable. Or you don't want to give back, let's say I'll put it right there. And most likely probably hit that. But it will give me still profit to pay for my commission at least. Yeah, just get used to the now you trading. I'm looking at your thing here, Javi. You trading your sim, not your evaluation, right? How can you tell me is when you have this account, when you have an Apex there? Usually, and in this one, I'm going to show you, where is this? Where's your, yeah, so I'm looking at this. Yeah, where's your account? So I'm assuming this is a sim account. Is that correct?
Yes.
Okay, okay, yeah, good. So again, where are we here on this thing? Where you're hitting, oh, I got it. See, when you hear that,
Mm-hmm.
it's basically I hit my trailing draw, my trailing stop. Where is that? Back to my, and you can customize your sounds. Yeah, probably hit. Yeah. So what I do here now, and here's another way of looking, you can set up your portfolio because you can just see how much did you win or lost. So that one I made $22.92. Again, at least that's a profit. Now, if you want to set this up, there's a layout here. In fact, you go, what is this? Is this called a tab? Wait. So you may want, if you want to see the questions on there, you want to go settings here, right? And go to what? Training mode. Click on that. Oops, right there. It'll show you all that information. For example, this is your what you call the dashboard. And you can tell you, okay, you want to see what's going on there. This is also the dashboard. So if you want to add another dashboard, for example, on this one, let's say you add a dashboard, you want to make sure what it is. Add a new dashboard type. Okay, so you want to add that, and you want to say, for example, I created that portfolio. Why? Because that's just where I can look back and see. This is a trade copier because I'm trade copying as well. How many, that counts that you're trade copying, or you can also look how did you do in that trade, and just go down here, and it's right there. Now you want to go back to your trading, just go back like that. And if you don't want any of those questions, you can go from here and you just turn off the training mode and it disappears. Oops. Oops, wrong one. Save layout. Click on that and it goes wrong. So this is your setting right here. Shows your dark mode, right? Sound settings. This is where you want to set your, for example, trade buy and fills. That's why I have it all British female, trade sell when you sell. What else do I have here? Limit order filled. And what else? That's about it. if you want to hear voices like that. So again, get used to, trading. I mean, once you see this break or here, or you're going to trade it once it gets below this cloud. You see this? It doesn't get, the candle doesn't close until here below the cloud. This doesn't close below the cloud, it's still above. There, your entry would be not at the close, but it can be at the low of that, which is right there. Your stop would have been up here. And again, you would have hit what? When you see it bounce off, this is the first chase line. Your target could have been the VWAP, and that would have been a good trade. Because now you're going from this is the +1. It's closing below, not not this candle, but this one's closing below. You could enter right there, right here, and take that all the way down to your VWAP. Now, how do you do that? Go to drawing tools, go to ruler or measuring tool right here, measuring tool under there, and you would have taken a trade right here, mark that off, right to the VWAP, click again, right there, and it shows you what it is, 52 points. So how many on M&Q? That's basically 52 times 2, so it's over $104 trade on just one contract. Now, if you had two contracts like you usually have running around, that would have been what? 200, at least 104 times 2 is 208. That would have been a great trade. So now here, what is it doing here? It's closing, but I want to see it. What I want to see here, if I'm going to take this trade short, is basically want to see the candle close below that yellow line. However, if this bounces off the yellow line, then you will want to take this trade when you see another candle form after the 5-minute candle. Right now, it looks like it's going to try to get down to where? I'm trying to get to the VWAP here. Again, we have like 7 minutes before opening, so right now they're not going to try to do anything. Let's get used to trading this. Get used to what you're seeing. Every time you see this pullback and you see that it comes back up. Yeah, I would have taken a trade once it breaks this swing, this candle right here. I would have taken that trade. Where? Maybe to the next VWAP level or to the next deviation level. Or just let your profit targets get hit. That's all. Once your first profit target gets hit, you can move, like I showed you, how to move your break even. But the caution there is maybe that could be a tight stop where that break even +1 will always get hit because sometimes it's a tight of a stop and it will get hit, but at least you hit your first target. That's why sometimes I let it give it some room to breathe. I don't try to put a stop because the thing is not the loss is not that significant. It may, you still be profitable depending on your target, but most likely you still have a small loss. Again, it depends on your tolerance for losing. Again, when it hits the first target, I would usually bring it to break even a little above where you entered so it can pay for the commission. Now, what you see here. So what do we see here? You see this candle now close below the yellow line. Would I take a trade? Yeah. I take this trade. No.
Sell order filled.
So there. So now you just stop. I'm going to adjust the stop to get up here. The candle right here, right there. Okay. Now you see it may bounce off here, but we'll see. Again, this is the opening. And I usually don't trade the opening. You don't know where it's going to go. So if that's the case, I'm going to move this up maybe a bit up because they don't know what they want to do. If it hits that first target, at least I got both of my targets hit. See, now you can move it like that. Or if you want to move it right at where that first target is, just go right there at the line and become like that. Or it's going to become, it says there, buy 2. Make it line up right there. Not yet. Oops. When it does that, just cancel. No, it's still buying 1. Usually when you hit that same line there, it becomes buy two. Huh, weird. Unless I do this. Yeah, now it becomes buy two. Separate it out. No, they just, what? Now I can't separate it. I thought you can. Weird. Yeah, I'm just moving it up so it becomes that one spot. Okay. So you can see it's bouncing off, like I said, even though, we see this, but this is this is a strong momentum to the downside. This might be a small pullback up, then come back down, maybe up to here, or even up to here, and then come back down. You got 3 minutes to the opening, and most likely it's going to bounce up. Let's see. Any questions? So that's wealth charts. Now, if we're looking at here, if we're looking at, and then again, this is a 40 by 10. Those of you who have maybe, what was it? 12 by 2 or, yeah. Yeah, 12 by 2.
We're using 20 by 4.
Okay, that could be good as well. Let me see here. So we do 20 by 4. There we go. So you're seeing higher high or higher lows and higher highs. So we hit the plus one there. It basically came back down. Now, usually with reversion, the one with Features Fanatic, he would have entered a trade right here. That's a stop loss, and it would have entered coming down. What would be his target? His first target would be the VWAP. Second target would be down here, right there, and just let it go. If he gets hit, he gets hit. But again, that's not a big of a loss. Remember, his thing is that he has a daily um daily budget of 250. See now, most likely it's gonna try to get to the VWAP. That's how his trade is. Basically, he's trading the extremes. The extreme one here is basically the plus one or the plus two, which is the range, the safety range, right? That's what's when price is in equilibrium. And if you read the Features Fanatic system, that's basically what it is. Very easy. Now, how does that different from the VWAP wave? It doesn't. The VWAP wave also has a type of different setups.
Yeah, I think we should practice more on the basic.
Yeah. But with the basic, you don't have the levels to how it's going to react. You're just basically
Yeah.
basing it off, the mid band. So that's if you go the basic right here, this is it. Yeah, there's your basic right here. So your basic is just here's the mid band. Again, when it crosses the mid band, you want to not the first impulse, but once it pulls back and then comes back up. We're talking about right there. Once it crosses the mid
Limit
band,
order filled.
is that you or is that someone in? They can't be
He
me.
thinks that's Javi.
Okay. I'm thinking I didn't place a tree. Okay. So here, see this? It went all the way down. You're waiting for a pullback. There's your pullback up here, and then continue coming down. You can take in that trade, hit you both of your targets. Same thing here. Every time you cross that mid band, you want to see a pullback. Right here, it went all the way up to, all the way up came down here. It went back up. Same thing again, does the same thing over and over. That's exactly, see? It did the same thing, bounced off the 233.
But that's almost a consolidation, right?
Yeah, yeah, at this point, because they're high now, it's no longer. There's your breakout right there.
Mm.
But you would have still made, you hit your first, at least you hit your first target, especially when it bounces off like this, and it would have entered right here above both. See this? This bar closed above the both everything, the 233, the 55, and the 10 or 21. You would have taken a trade here rather than wait for this. You would have taken a trade right there, which is above all three moving averages, right there. And you would have gotten some points there. Comes back down. Again, if your stop is here, you'd still be in that trade if you had the two remaining contracts, right? Because that's what you're basically moving it up until, or unless it hits you don't move up the last target, it'd have been hit right now. It'd have hit a profit target. It would hit both profit targets. That's what I'm trying to say. Because obviously, what's our trend? Obviously, it's up. There's your first move. Right there. One pullback, and now it continues going up.
Yeah, yeah.
So you could have traded this too. Once it gets below the 233, you wait for the pullback. There's your pullback. You would have entered here, and where would your target be? Again, it would have hit both of your targets. Because you
I got
entered, because if
yeah, I
you,
entered the latest one.
yeah,
Yeah, it got it.
yeah. So you entered right here. You would have, what was that? What was it? 80 ticks, right? So that's 50, 51 you would have gotten. Because right now, 80 ticks is $40. So that you would have hit that second target, which is around $51. Yeah, this is a good trade because why? Bouncing off again. You could have
Mm.
entered right here when this is basically based on the color of the bars is based on that um super trend. But if there was no color there, you'd see this reversal bar blue here. You would have entered the second one, you would have entered there, you would have got your target going up. Even though on their super trend it's still colored red, but once you hit this and you see the reversal bar, that's when you enter. That's why I like the reversal bars. You know it's reversing. This one you don't see. You're gonna wait until it turns red when you could have entered this trade right here when it gets below the 21, right? And you would have entered that trade all the way down. See, if price closes in this case above that 21, you would have entered that. That's more an aggressive trade. Same thing here. You already see this. What do you see this? You see this already up to the outer band, most likely. Your entry going to be here, because now it's below the 21 EMA, the yellow dash. You could have entered right there. And I think, what is it down here? Would it hit both of your targets? Yeah, you would have made another $100 there. But now you see this come back. It came back to the 233 bounced off. You could have entered right here. You would have hit your first. I think you would have hit both targets again too. This would have been right here. Let's say you took it there. You got it. Besides that, not quite. Oh no, you would have hit because it would have been 40. The second target is $40. Yeah, you would have got that's another $100. Okay. Any questions? Any questions from the wealth chart people? Kate, Axel, Javi, anything there?
I
I'm
guess
sorry.
my question. Oh, sorry, Axel.
Go ahead.
Um, what's the because we have other signals here that we haven't talked about, indicators rather. Will we be covering those indicators
Which one?
like the wealth signal?
No. That's in fact I don't even understand. I just do the basic that you have there. The other signals I don't really mess with because I don't quite understand it myself. Where is that?
All right. So we should remove.
Oh, so wait. So so which one are you talking about? Which one?
So we have the wealth signal
Which signal? Wait. So indicator or signal?
indicator.
Okay. Which
Right.
indicator do you have a question? These are the indicators up here.
Right. So we have
So,
like, yeah, there. Like how do I read those indicators?
okay. So breakout forecast, they're basically, if that's strong, so you see this dot one here. I think that's a range breaker, right? Going to the
Right.
downside. This one is what, well, these are different type of signals. You can take those out if it's too confusing, but those are really signals to take. For example, this is usually on a pullback right here.
Mm,
Pullback, your entry would be here going short. That's good. This is usually your stop. Comes back
right.
down, and that's your stop. And if it hits that stop, then you're out. Again, these are these like this one, that's good signals, or even the wealth chart signals. Usually, the wealth chart signals is when there's a pullback. Like, for example, right here, the pullback you would have entered coming back up. You would have hit your targets. Same thing here. See that pullback again? You could have entered right here or wherever this showed you. Your stop
Right.
would be down here, and you would have made your points.
Yep. All right.
Okay.
Yep.
Those are
Thanks.
more like those are like strong momentum candles, pullbacks.
Right.
See, like for example here, I don't know why you didn't get one here. Weird. That's why why is there no, yeah, there's your one right there going back down. It pulled back, coming back down. There's a strong momentum coming down. This one it showed there, but it never lived up to its signal. It just came back down.
Mhm.
You would have been stopped out there, but again, this is usually what, 8:15. Okay. Basically, that's how I see it. I'm looking at those. I'm usually trading my levels, just where I'm paying attention to where the candle is closing, not where it breaks something and comes back down. Like for example, here, I want to see it break right above
Right.
that plus. This is a plus one deviation. These are just getting rejected. That's why it went down. Now it retested back again here. Now we see this is not quite closing. I would take this candle right here. Is now closed above the yellow line, and take the high here. And where would my stop be? Stop would be down here. Um, then you see this? It just kept on going up. You would have hit your target. That would be a good sig. That would have been a good trade. Or you could put your stop down here, and you can see your stop's not going to be close to being hit. Just kept on going up. Your target would have been +2, which is right here. That would have been a great trade. So these deviation levels here, again, the green ones, those are the minus ones. So -1, -1.5, -2, -2.5, -3. Um, this is +1, +1.5, +2, +2.5, and then +3.
Right.
Usually when it gets down to +2 or even +1.5, they're gonna try to bring it back, which you see when it comes back. When it does come back, they're gonna try to get back down to either the VWAP or the yellow line,
Right.
back to balance, right? So right now, where are they now? Where is this? Yeah, these are too big. Yeah, that's why I don't trade that because that's what they're trying to figure out where they want to go. I usually start looking at trades around 10, close to 10:30 Eastern or 10:30 p.m. here. Okay,
Got it.
so continue trading now. Those is it you is it do you understand this now? Wealth charts people, do you understand these, or do you want more just without the VWAP? What you can do is take out the VWAP Um, and just trade when you see the crosses. When you have that's red and the cloud is red, that's when you enter a trade. Um, Wait for the pullback, come back down. But you wouldn't know where your targets would be. Well, your targets are going to be, because like I said, you don't have to move your profit targets. For me, more advanced, I move it to where I know where the level is going to be. Most likely where the level is going to be. Definitely, it's going to hit the first target, but then you want to, optimize your second target. But for beginners, you don't have to move anything. You may want to move the stop loss to, the previous swing. You can do that. But other than that, I wouldn't move it. I mean, are you guys clear with the VWAP? Or like I said, if it's easier for you to take out the VWAP, go ahead and take out the VWAP. How do you do that? You go to the VWAP right here, and what do? You just click that and it goes away.
Dom, I
It's,
had a question regarding the closing and the opening of the market because I'm trying to analyze the app itself in the paper trading platform, like the simulation. There's like two I would say tabs there that says open positions and then the
mm,
orders. So for the orders, of course, that's the actions that we take, whether that's gonna be buying or selling,
you,
right?
this
But
one, is this what
yeah,
you're talking about? Yeah.
yeah, so I would like to ask for the open position because you mentioned before that after the market closes, whatever we earn or we lost will be like refreshed the next market day. So I'm just wondering for the open position, is there like a way to close it, or is that something that we really bought already and it just, it would just show us like the profit where that's the daily P&L, the profit and loss, if I'm not mistaken. So I would just like to know whether that's really permanent there as
Okay.
open
So
position.
your question is, what about the open positions? Yeah, you want to make sure if you have any open positions, you want to close it before market close.
So I thought Apex would automatically close it.
That's on Ninja Trader.
Oh, so for Wealth Chart, you have to really be
Yeah,
there when the
yeah,
market closes.
yeah.
Okay, how do we close it? Could you show us how to? Because I'm not seeing any option to close it.
Cancel. Or here. Yeah, there is. Right here. See this? You can either cancel all orders or flatten. That's where you close the position. See this? Flatten. You press flatten, it closes all positions.
Okay, so that really when we say flatten or when we close that open position, it means that we are locking in the earnings for that market day. Is that correct?
Well, you're basically open. You're open. Your trade is still open. You can be locked into your loss, or it can be a profit. Again, it's just going to be showing you your open position, your open trade.
Yeah, what if let's say for example, like a minute before the market closes, I'm earning $300 and I want to close or lock in that amount. So
Yeah,
I want
just flatten, just flatten.
Okay. All right, got it.
Yeah, just flatten, close all the positions that you have open.
Okay, got it. Thank
Okay.
you.
Yep. Like for example, you don't want to hit your stop loss. So you said, "Oh, this is going the wrong way," but I don't want to hit it the stop loss. I'd rather take the loss now. That's a smaller loss. So you just hit flatten and it'll close the position out.
Got it. It's clearer now. Thank
Mm.
you.
Yep. Any more? So again, continue posting your trades. Again, with this one, like I said, you can either on especially with charts because I like this when you go to your drawing or global chat or chart settings right here and go into what? Trade history. Right now it's off. You click on that, it becomes it's on. There's your trade history. You can make it wider so you can see exactly where you entered the trades like that. Enter long, exit short, and I think you got profit there, right? Here, enter
Oh, sorry,
short
can you share again how?
right here. Or
Right.
just right click on the chart,
Oh, okay, right.
then go to global chart settings. and then go to turn trade history on. Just click on that. Right now I have it on, so now I can click on that, it goes away. If you want to turn it back on, go to trade history right there. Click on it, it's going to come back on.
Thank you.
Yep.
Hey Dom. Yeah, just want to reconfirm the ADM strategy for Ninja Trader. So the one we have is 5 orders. Target one is 3. Stop loss
Mm,
40, profit 30.
okay. 40? Yeah. This is a different one. Yeah. Your
It's
stop loss
40,
is
30.
40. Yeah. Or what
And
you can do,
then
yeah, you can do that, or you want your profit more, you can do 40, 80. So right now I think you have 40. Wait, what do you have? 40 what? 30?
40, 30. Yeah.
Your profit target?
Yeah,
Your-
stop loss is 40, profit is 30.
And what's the second target?
40, 60.
No, you said 30. You said 30?
Target 2 stop loss is 40. Profit for target 2 is 60.
What's the profit target? Because you said
Yeah.
stop loss. What's it the profit? Okay, here. Target one. I know your stop loss is what? 40, right?
Yes.
Profit is what? 30 or 40?
30.
Okay, that's why. And target two stop loss is again 40, and your profit
For
target is what? 60?
60, yes.
Okay, you can adjust that to 40, 80.
Okay.
Especially during like the New York Open, you have a lot of volatility. I'd rather have you get more profit because you can easily hit that 40, that you're going to hit that target quite easily.
Mm-hmm. Okay.
Okay. There's a lot, just as long as you know where you enter. Because sometimes it really depends on where you enter. Because if you enter and you're chasing that trade, most likely you'll get stopped out.
Mm-hmm. Mm-hmm. Yeah. Thank you.
And if you think that that stop is too too tight, you can adjust it to maybe, okay, right now it's at 40. You can adjust it to maybe 50, between 45 and 50. The stop loss if you think it's too tight.
Yeah. Yeah.
Okay. But
I'll
keep the
try 45 first.
yeah, and keep the profit target at 40 and 80. That's good enough. I wonder why I have this. So what I've been doing now, I've been really trading the what's his name? Fanatic, what's his name? Futures Fanatic guy. So he's basically trading two, but I double it usually because I know I know where my entries are. So I usually this is the one I have. I usually trade this one, 4 contracts. Or no, 5 contracts. This is what I'm trading. It's like half of E-mini. So this is what I'm trading right now. Yeah, 40. Oh, I have 30. I didn't know that. I should just adjust this, especially during the. Okay, let me adjust this. 40, like I was telling you, 80. And usually once that I adjust my stop. It's when it sets like that, and then I just adjust my stop to the next swing, right? That's what I usually do. Let's maybe make this 45 like you were saying. 45, 45. Then I just add to save template to where it's at right now. Yep, save. Okay. Yes. There it is. Okay. So there. Okay.
Yep. Sounds good.
So continue practicing, get used to how how you press the buttons or where you enter, just get used to how the market moves. That's all you need.
Get used to the panic.
Don't try to attach that. I mean, losing is nothing because losing what you're losing right now is not that much.
Yeah. And it's a sim account anyway.
Yeah. Well, The evaluation is a sim account too.
Oh yeah, yeah, yeah.
Yeah. So just practice, you know. I mean, get used to losing sometimes because you don't want to sit there and you start freaking out and you're taking your evaluation and you're already in panic mode. But losing is part, especially how we have the settings right now. Your losses are really minimum unless you get a string of three or four. Again, you want to practice the 250 loss target. If you hit that, quit trading. You want to practice that.
Actually, yesterday my max loss was 560.
Mm,
So I practiced, tried to be more consistent, and I brought it down to 180.
yeah, yeah, that's good. Especially when you're in a loss like that and you bring it up, any type of profit you can close. You just say, I quit. At least now I'm in profit, you know,
Yeah.
rather than being lost. You don't want to be greedy and say, oh, I can make this 500.
Yeah.
Okay.
Yeah. Thank
Especially
you.
now, yeah, when you get used to this basic, you'll see that the one that regarding the deviation levels, especially the way read that thing or even go to he has a 7-day free trial. You'll see how he enters. He just basically he knows where it is. He just enters. He's maybe trading two micros and just he lets it
Mm-hmm.
go. He lets it go. Maybe he hits the first profit target, but it's less stress. Like he said, it's less stress. You don't even have to have a trade setup, just as long as you know where the level is. And that's what he does. It goes from either the reversion, which is going from +2 or -2 up to +1, or if you, let's say it gets down to -2, his target is what? -1. And what do you mean? What do I mean by that? Right here. So I'm using this. So let's see. Right here. Oop, what happened to that? There. So right now, where is it at? So we were up. Yeah, all the way down, we didn't quite get to the +1, right? Now it came down here. Now what did it do? Here you see this? Oh, this has signals. Okay. So this is basically when you have a cross like that, that means you have either when you have the 21 cross, right? It's going to signal and then you would have just taken, a right here. It would have been a great what you call it? Trade going down because now it's trying to hit the VWAP, which it didn't, but you would have hit your first target. Your stop loss would have been whatever the 40 ticks. You would let the stop loss or bring it to break even and hit your break even, and that would have been profit. Now here, this is your classic one right here. You would have entered here because now we're breaking this what? This is no longer this is now +1. Now your target would be up there. That'd have been a great trade. So usually when I see this, yeah, I hit your first target, but my runner it would hit my first target, and my second target would be up here. Now you see this pulling back, right? So you basically entered here. Where's your stop loss? You can either be, break even, or you can bring it up. Oh, see, that's why it's moving so fast because, again, you could have brought it right here where you have this swing and would it have been stopped? No, not yet. Because this means if they break this down, you're getting a lower high or lower low. And it didn't. It bounced off what? It bounced off the 50 EMA, the mid band. And now this is going up there. Now I would have added positions right here. I would have added more contracts. My target would be up here then. And that's where it's going. See? Because the target is +1 deviation. See, that's why his thing works. I mean, it's less stress. Because if we hit a loss, it's really minimal loss. So now it did create a higher high. When you see this, that's your that's where you have your liquidation sweep. And that's exactly what they did. There were buyers here waiting for a breakout, which they got caught, and then they got
I'm one of them.
yeah. Yeah. That's why when you see this, when it breaks like that, or even break this is fine. But when you get like this color, wait for it to pull back, and if it does come back up, that's when you take the trade. I don't take that. That's why they're waiting for, they're waiting for those people who are waiting for the breakout.
But I made a profit there.
Okay.
Not it didn't hit the second
Okay.
target,
Yeah,
but
yeah. Oh,
it
yeah.
was
Okay.
still
Yeah.
profit.
Okay. As long as they hit the first target. Like, for example, when they do this break of structure, they usually
Yeah.
hit that, pull back, and then if it goes back up, that's when you take it again.
Mm-hmm.
Say this one is too strong. Look at this. We didn't get the pullback, so that's fine. Just let it go. Same thing with here. We had the broke there, but this was strong. You could have just taken it right here. You saw that strong momentum. This one, you see here, you have the pullback up, come back down. You're taking the trade here, all the way down to maybe here. But here, it hit that target. What did it do? It bounced up, comes back down. You would have taken this trade right here, and you would have gotten there. My target would have been actually down here. Would hit my first target at least, but again, that would have been I would put my stop at break even. Again, this one, again, every time we break the 233, what do we look for? Pullback right there, entry right there, or most likely get a pullback. There's your pullback right there, right here. Comes back up. You would have entered there. You would have got more than you would have gotten your $100 again. Or just let it ride. Your stop is down here. You're right now the price is so much up there. Yeah, see, you even has a stop here and went all the way down here, but it would not have been stopped, but you would have hit this further target going up. Again, you see, your stop is here again, and you're still playing around until you hit that target up there, because eventually it's going to get up there. And that's what that features fanatic does. He doesn't care because he knows it's going to get up there, but his risk is really small. Because he knows it's going to eventually get up there. If it doesn't get up there, then, if it's between here, okay, so that's +1, this is +2. Yeah, once it hit this +1, it's going to get up there. If it doesn't, then he's going to wait. If it's out here somewhere, he's going to take a trade coming in from the +2 back down to the +1. If it gets below the +1, in this case, right here, his target would be the VWAP. But in this case, it just didn't quite make it. Now, he would have taken this trade. Now his stop would have been, he makes a big stop, but again, that would have been maybe how much of a loss? Maybe 200 or something that on one contract. But right now,
Uh,
I think what he's doing is he's gonna wait for this to get up there because you would have entered right here, right? Let's see the breakout right there, and yeah, he would have been. He at least got a break even right here when he entered the trade. Basically, this would have been break even, but he hit his first target at least.
I have a question about the swing markers. So the swing markers are the yellow dots, right?
Yeah,
So how do we read them? I mean, how do we use
those are
them?
reversals. That's like support and resistance. When you see that, that's usually it signals a lower high. That's basically saying, okay, that's how you see the lower highs and lower lows.
Okay, okay.
The swings are basically reversals, meaning reversal or change in direction. See this is going down. What happened? Went back up, created that swing, came back down, created that swing there. This one, we're
Okay.
all going up. There's a reversal candle. It created that swing because now we changed direction to the downside. We're going up here. You see this big move to the downside? We get the reversal
Mm-hmm.
bar there. It creates that swing right there.
Okay, got it.
The swing is usually a change in direction. So if there's a change in direction to the upside, this is now considered a support. Was it a good support? Yeah. Look at this. If you do this support right here, let's say you do a support right there. There's your support because that's where it bounced up. It did the same thing here. That's a good support level. It bounced off that support level.
Are we discussing the support and resistance concepts?
What is that?
The support and resistance concepts, are we discussing those in the future?
Do you want me to discuss it late next session?
Yeah, sure, sure.
Because basically the support and resistance, basically that's why you have the swings. For example, right here,
Oh,
right? That's your support and resistance right here. There's your resistance right here. You can just draw it right there, right? Or even draw it down here because let me see here. Where's no, I'll do it right here because you see the swing, right? So let's say I do it right there. I'll do it right there because you have the swing. Or get down to the next, at least down there, right? So there's your swing. Look how many times it respected it. See that? You got rejected, came back down. Got rejected, came back down.
mm,
That's your resistance. Look at that. It's the same thing here. It bounced off, came back down. So that's your resistance level. The support level would be right here. You can draw that again using this, and you can see where the support is, right there, down there. And what do you see? You created this first support level. What does it do? Tested it again, got rejected. Here, they're gonna try to test this again. You know, the longer it gets tested, most likely it's gonna start breaking. But right now, that's strong. It's pretty strong because they've been tested how many times? One,
yeah.
two, three, four. Oh, there, they broke it finally. See that? Because it's like chipping away at a thing. All of a sudden, it got weak. So
Yeah.
this is basically your resistance that was strong at one point, and then now it broke. So now what happens is it's gonna become support. Once you break that resistance, it now becomes support. Where they're gonna come back, pull back, and then continue going back up. There it is. I'm trying to push it up. Those are so you want to talk. So we'll talk about support and resistance next session.
Yeah, maybe just the basic concept of it.
Yeah. Okay. So there, they reversed it to point stuff that this resistance now becomes support. Okay.
Yeah.
Let me know. You can download those things I gave you. I'll see if I can get this template to where I want it. I think this is where I'll see. What yeah, this is as much as I can revise it. But on the free, this is the free VWAP one, which is still pretty good, I think. Um, let me know when you guys are ready to start learning how to trade the VWAP. It's all there that I sent to you in terms of the PDF. And other than that, if we can, you can, once you get efficient on your basic strategy, because I want to tell you right now, the VWAP is really easy to learn and know where you're going to be entering the trade. You know the possible breakup. Because right here, we already know it's going to be it's going to try to get that +1 because we already passed here, right? So you already got your first target. And if you see continue going, seeing higher lows, you know it's going up. Most likely the target would be there. So a lot of people, when they see my trade, they goes, "How do you know it's going to go up there?" Well, it already here's the +1, most likely to get to the +2. That'd have been a
Yeah,
great
maybe we
trade right there.
can yeah, maybe we can do that on Monday since today is Wednesday, so there's another 2 days to practice the basics.
Yeah. Okay. Because once you can learn this, man, that's where you can easily just make money, especially with low risk. You say your target is only 250, you'll make that 250 quite easily, especially in New
Yeah.
York Open.
Yeah, my goal for this week is actually to build the discipline.
Yeah. Yeah. Well, before you build the discipline, yeah, exactly. Where you want to enter, right? See, look
Yeah,
at this.
yeah.
So they right here they pulled back and they continue going up. Most likely, if I had it here, because I can't really configure it here, they have uh, you know, the the in between here. So you have the +2, you have the +2.5. Now, when you get up here to +3, most likely they're gonna start going down because you want to see where maybe here it might start coming down. Again, I don't know, this might be strong. Yeah, this might be strong momentum.
Now it's going.
Yeah.
It's reversing.
Well, right now, look at where the fifth, here's the mid band technically, and you see where the 1121 EMA, it's still above the mid band.
Yeah.
That means it's still on momentum, still going up. We're just getting pullbacks here, and just continue. I mean, this is where I'm sitting here. I'm adding more contracts. Why? Because first of all, the 21 EMA is still above the 50, the 55 right here. So I'm just adding contracts. It's still confirming that strategy that the trend is still going up. Same thing with, on wealth charts, it's the same thing. The wealth charts is when you see that cloud. Let me see here. Wealth charts right there. Same thing. And these are just 5 minute. See, we see this, the red line. When you see the red cloud, that's the same thing. Or the green cloud, I mean, that means it's still going up. And you have this trend right here, which is still green, so it's still going up. Most likely it's going to probably get up there to the next deviation level or thereabouts. Okay. Any questions? Continue practicing. Get used to see what you see. If you have any questions, let me know. Just want to see where your trade, you'll see how your trades are getting closer and closer. You're being more selective rather than, oh, I missed that trade. Don't chase the trade. There's always an opportunity where you see the pullback.
Yeah. I went through that.
Yeah, yeah, yeah. That's why this is all learned. You'll get used to that.
Now it's going down.
Okay, guys?
Um,
Yeah, go ahead.
no, I mean, thank you. Thank you for
Ah,
today.
okay. So
Yeah. Thank you very
again,
much.
yep, just continue practicing. And that's what it is. That's what it's all about. Getting used to the charts, getting used to everything. Well, when you become efficient, you'll know. Especially I'll know when I see where your entries are.
Yeah, looking forward to more practice and
Yeah,
experience.
yeah. That's why screen time is very important.
Yeah.
Just like a professional, let's say professional athlete, he has to practice daily to get to where he's at. Same thing in trading. Because
All
then
right.
once you start doing that, it's gonna be second nature. Okay?
Got it. Thank you.
Okay.
Thank
Enjoy
you,
your
Dom.
weekend, and I'll see you guys on Monday, right? But continue trading.
Yes,
All
You
right.
thank
too.
Okay.
you.
Thank you,
Yep.
Dom.
Bye-bye.
Yep. Bye-bye.
Bye-bye.